I can't really recall a period in my 40 years of looking at world economics and finance where I can remember so many people are confidently forecasting recessions across the Western world, the only debate being how severe. And that is quite interesting because if inflation turns out to be improving a lot faster, as one very famous US hedge fund manager said to me many, many years ago, the only thing you know about central banks is when the evidence changes, they'll change the view. And in this past week, as you know, the Fed has talked in the US again, very tough about how long it'll keep rates higher for. And that's the message they want to send us now. But if it looks like inflation starts to improve a lot more, and if the economy weakens more, the Fed will change the view. So we'll wait and see, and it's going to be extremely interesting to watch.
Jim, how do you see China as an economy evolving and opening in 2023? It's anyone's guess. Some are calling it a black box, some are calling it a Pandora's box. Everyone is guessing. Frankly, no one knows right now.
I agree with that too. Given how long China has had this very rigid lockdown policy, and on the available evidence that we all can see about the rate of vaccination, there is obviously quite a lot of risks from this abrupt change. And you do get an enormous increase in COVID infection, and for the elderly, an increase in mortality. That said, as most other countries have experienced, the last variants of COVID, Omicron as it's known, of course, appears to be pretty mild. And it's not out of the bounds of possibility that the Chinese now significantly accelerate the vaccination rates. And they managed to get through. But this is obviously a huge unknown. And then because of what's happened with the tightening of policy, particularly in terms of the residential real estate market and credits, there's lots of uncertainties about that too. But if I put it all together and I look at the policies that the Chinese government have announced in the past week or so to try and support the consumer, I think by the spring, I would be in the camp that thinks that China might at least cyclically positively surprise next year.
Jim, let me point out for our viewers the India experience. The Indian economy went through a grinding lockdown for about 3 months, but when it opened up, there was a huge pent-up demand, revenge shopping. The attitude towards spending at a consumer level has changed. If China opens in 2023 at some point in time, and we are talking about over 1 billion people, could that lead to a very big differentiated demand-driven world in 2023? Demand for commodities, demand for oil, demand for energy, everything will start zooming up and it could be back to the inflationary fears?
I mean, that's an interesting risk of a stronger than expected China. And of course, it is possible. China, as I've discussed with you many a time, and as you mentioned in the introduction, has become an enormous marginal influence on the world economy in so many different markets. And if China improves, particularly if it's being driven by their own consumer, this is going to be a pretty positive thing for certainly a number of other economies, particularly consumer exporting ones in Asia, included in them probably Japan and South Korea, probably Germany and Europe. And so I'm really focused on that. But it is true that that with it could mean an increased Chinese demand for commodities, including energy. But that would really depend on what style of improved consumer activity the Chinese undertake. If it's more to do with even faster use of internet-based shopping and not necessarily a huge amount of more personal travel, then it might not have the consequences on commodities. And then, of course, if the real estate market remains under pressure, then that would limit some of the demand for certain commodities that relate to house building. So I wouldn't want to have too strong a view on that, but you would think at the margin, if China comes back stronger, certainly the big decline in commodity prices that's been taking place in recent months will come to an end. And that would be, of course, as a consequence, an additional reason why central banks would be very cautious.
Jim, I'll take the clock back and take it almost a decade back when you coined the acronym BRIC. And frankly, if you look at the progress of the BRIC nations which you coined, which to your mind has been the strongest BRIC economy and which to your mind will be the strongest BRIC economy for next 5 years?
Well, it's actually it's over 21 years now. November the 30th, 2001 is when I first brought the acronym into discussion. And so if I look back, it's very clear that China has easily become the most successful of them on relative and absolute terms, as I've touched on already. Today, it is twice the size of all the other BRIC countries put together. India has done pretty well as well, of course. It's not done quite as well as its potential over that period, but it's done well enough to become the 5th largest economy in the world. And of course, Brazil and Russia have been a huge disappointment, particularly in the second decade. When I look forward to the next 5 years, I think it's very hard for me to avoid the conclusion that India actually looks the most promising. What is really interesting since COVID that you touched on, India's come out of it seemingly reasonably well. And despite so many challenges to India's education and health system and many other issues, there are certain aspects of the Indian economy that superficially positively surprised me, particularly how it's coped with this period of huge energy increases and how it appears to be increasingly embracing new technologies to fight climate change. And if you put all these things together with the enormous positive dynamics of its labor force, I think in theory, the next 5 years look pretty good for India. And if I put it in the BRICS context, as this decade unfolds, India is in a position as we get towards the end of the decade towards approaching being the 3rd largest economy in the world not long after. And so it's quite exciting for India. For China, there are enormous challenges that we've touched on, but I do think there's a decent chance they will do better the next 2 years than they have the past 2, which in a way won't be difficult. But I do worry that unless President Xi becomes more friendly to business and somehow we have an improvement between China and the rest of the world, China is probably past the absolute best time of its growth performance. And it might only grow by around 3 to 4% on average for this decade, which would mean India would almost definitely grow by more than China.
So heartening to hear that, Jim, and so heartening to hear that indeed. Jim, if I can be a devil's advocate, I would like to just flag up one concern, which is a very visible concern, that if Indian economy has to go from 3 trillion to 5 and 5 to 10, the energy needs of the country are going to be huge. They're going to be large. And as the per capita increases, your energy consumption will also increase in the same proportion. India is still energy dependent, whether it is gas or oil, and solar and alternatives are still a distance away. Do you think this could be the biggest impediment for India?
Potentially. I mean, again, I'm going to be in the spirit of how I've answered much of what you said earlier. You know, I don't know, and I'm not sure anybody does. What I would say as a constructive source of hope as we draw 2022 to a close, what is fascinating to me is if you look at what's happened with global activity and global energy usage and global gas prices, despite the scale of the damage and the ongoing war in Ukraine, European gas prices have fallen by over half. They did reach at their peak. And there is growing evidence that many European countries have rather rapidly improved their so-called, what we call energy efficiency, by essentially using less energy for the same amount of GDP growth. And it's something that sticks in my mind, because if I go back over 40 years to when I did my PhD, I did it during the second oil price crisis. And what really emerged from that period is that energy consumption declined as a share of GDP, and energy efficiency improved dramatically. And Japan at the time was a particularly strong positive example. And so, and that's why I partly touched on earlier what appears to be growing evidence of big companies in India starting to be more active in trying to improve ways of energy efficiency and finding alternative energies. So it is obviously a huge concern that as India gets bigger and goes from 3 to 5 and 5 to 10 trillion, its carbon footprint gets bigger. But I would not dismiss the possibility that the opposite is the case, and this just ends up being this enormously exciting period for the application of more efficient and a whole new set of alternative energies in India.
I'm just going to shift gears and perhaps change the scope of the discussion, and I'll throw in one more ingredient in the melting pot. How do you see the geopolitical situation evolving? I'm not talking about the war, Jim, but I'm talking about the big blocks here, whether it is NATO or what is happening to the Quad bloc, G20. How do you see the big blocks now moving in 2023?
I mean, what I would just say at the outset about that is again, as this year finishes, it is fascinating to observe how India itself has navigated this very, very challenging and complex issue about geopolitical opposition or cooperation. In some ways, India is showing itself to be a bit of an exemplar as to how you navigate between these great big forces of China and the US, and it seems to have done it quite well. But these issues are not going to go away. But let me start by saying what could be a very long answer, and I'll try not to make it so. But how China deals with this probable pickup in COVID infection itself might be relevant to how the next stage of this challenging global cooperative spirit develops. I've said to some Chinese policymakers, and whether it ever gets back to the highest levels, I don't know, but what a really, really bold and clever thing for the Chinese to do would be actually to consider importing a large number of the best Western vaccines, which would send a very different message about how eager China was to truly cooperate on global trade, and would almost definitely force a more open-minded approach and a more positive response from Washington and probably European capitals. On the same kind of spirit, as I think I've said to you before, but I say it always to Chinese policymakers, for the next stage of One Belt, One Road, which is a signatory policy of President Xi, I would love to see the Chinese actively invite India to help co-design it, rather than what has been the approach since 2013, where China basically just tells the rest of the world how it's going to do it, because it's not working for them. And as we pass through time, it causes more countries to be a little bit resentful and not wanting to cooperate with this part of their policy. But if we had the improvements in trade and investment between China and many other Asian countries, India included, and I've looked at the numbers so many times in the past, the boost that would give to Asian trade and world trade would be absolutely spectacular. And we need some kind of new initiative and some new way of thinking to break this rather tiresome and frustrating and somewhat boring sort of never-ending standoff between the US and the G7 countries these days collectively and China and many parts of the emerging world, because it's so clear, and this goes obviously all the way back to 21 years when I created the BRIC acronym. It's very clear we live in a world where there's important countries that don't share the same cultural or political beliefs. And we've just got to get on with it and find a way of cooperating for everybody's best interests, rather than to have some kind of battle as to which one's better, because that is not going to be a situation in which anybody wins.